Now this problem, appropriation, we had already done yesterday. So you can refer that appropriation. So why I have taken this problem? I just want to make you understand about preparation of the two accounts, that were capital methods, fixed capital method and fluctuating capital method. Okay, that two methods I want you to focus on that. So first and foremost, once again I will do the appropriation, and fixed and fluctuating I will do that. Fine. So Sanjay and Gopi commenced business with capital 80,000, 60,000 respectively, 1/4. They agreed to share profit in the ratio 3:2. Their profit for the year ended were 23,000 before interest on capital, then interest on drawing, then loan was given to us, annual Gopi was given, their drawings were given. Fine. Loan was given on 1st of July for 9 months. Prepare profit and loss appropriation for the year ending, and you take a partner's capital account also. For this problem, we will do partner's capital account. So please refer that and tell me. Okay, no problem. We'll solve this once again. There's nothing in that. So now it takes only 5 minutes. Now first and foremost, it was profit and loss appropriation account for the year ending, and all it was there. Okay, so let's do fast. So one revision for one more time of appropriate particulars, amount, particulars, amount. Yes. Now bring your profits, 23,000. Yes. Profit is 23,000. Am I right? Yes. By interest on drawing, I'll just write short form because I've already done that. Sanjay's how much? Sanjay brings drawing, interest on drawing, 1,000 rupees, and Gopi brings 750. Correct? So 750 was that, total was this. So, to interest on capital account, we had to calculate. So, what was the 80,000 and 60,000? Yes, was 80,000 into what was that? 6% it was. So, 6 8s are 48. Interest on capital was 6 8s are 48. Yeah, 80,000 into 6%, 4,800 it was. Fine. Then Gopi's 60,000 into 6 by 100. It was 3,600. Clear? Now loan was there. So who had brought loan? Sanjay. Yes. Sanjay's loan. Interest on loan, interest. Interest on loan. Interest on loan. So interest on 10,000, interest on drawing as immaterial, actual interest on drawing was given. So 40,000 was there. Take this 40,000, 10 by 100 into 9 by 12, 1st of July. So it is 3,000. Just check and do. 40,000 into 10 divided by 12 into 9. Yeah, 3,000. Correct? What was the profit shared among the partners? Yes. What was the ratio? 3:2 ratio. Yeah, 3:2. The S 3 by 5 into, let's see what is the difference left. 23,000 plus 1,000 plus 750. So 24,000 24,750. You had 24,750. Correct? Now 3 by 5, 3 into what is the difference? So how much? 4,800 plus 3600 plus 3000. How much you get? 11,400 minus 24,750. You had got 13,350. Just check. 23,000 plus 1,000 plus 750. 750, yes. You got 24,750. Here minus of 4,800, minus of 3,600, minus of 3,000. 13,350. 13,350 divided by 5 multiply by 3. 8010. Where 60 is correct? Yeah, 60 is correct. 60,000. Interest on capital 6%. 6. 24,750 is correct, minus 336, 10,800. Minus 13,350 divided by 5 multiplied by 3. 8010. 8010. Then rupees 2 by 5 into 13,350. 13,350 plus 3,000, 2,600. Correct. So 13,350 divided by 5 multiplied by 2. You get 5,000, 5,340. Okay, 80. So 8010 plus 5340. You get 13,350. 13,350 you get. Clear? This was your appropriation. Fine. Now there are two methods of your calculation of methods for capital methods. Partners capital. One is your fixed method. One is fluctuating. Fluctuating. T-I-N-G. Fluctuating. Fluctuating method. One is fixed and fluctuating method. Fine. Now, first method will take fixed method. In fixed method, what happens? Your partner's capital will be intact. So, whatever 80,000 and 60,000 these partners have brought, that will be intact at the time of dissolution until unless some changes are done in the partnership deed agreement that we want to change or we want to do something. Additional capital is brought in or withdrawal of additional capital, something is there. That time there may be a fluctuation in that capital, otherwise it will be intact. So here what happens, whatever the capital accounts are there, that same thing will be carried down, 80,000 and 60,000 for Sanjay and Gopi. Other things, please see, whatever you have debited in appropriation account, that will go in current account. We prepare partner's current account or we will prepare drawing account, one and the same. So whatever we have debited will go on the credit side of the partner's capital account. Whatever we have, not the profit, whatever interest, drawing and interest on drawing will be debited in partner's current account. That is the fixed method. So fixed method will do particulars, then Sanjay and Gopi. Particulars, Sanjay and Gopi. Yes. Now it is a small account. Please go to your problem by balance. Brought down 80,000 and 60,000. No additional capital and all has come in. If that is there, it would have got adjusted and little differences would have come in the capital. So to balance, carry down 80,000 and 60,000. Here, now see, 80,000, 60,000. Yes. Now you ask the partner what are their capitals. They will tell us. Ours is 80 and 60. So what about other things? Others we are going to prepare. Here only partners. We are preparing partners current account. Because other things has to be rooted no in drawing or current. So or drawing account. Whichever they tell we can prepare. So again we have Sanjay Gopi, particulars. Correct? Yes. Now what happened? Except the capital accounts, all what you have debited in appropriation will appear in the credit side. So please go on the debit side of appropriation by interest on capital. Sanjay Samaj 4,000 4,800 and 3,600. Clear? Now interest on loan, who is getting? Interest on loan. Sanjay is getting. How much? 3,000. Bring that. So interest on loan, Sanjay is getting. Put cash. Now profit sharing, see, by profits. Not that original profit, whatever after adjustment of all those entries. By profit of Sanjay, that is profit and loss appropriation count. Profit and loss appropriations. Okay. How much Sanjay is getting? 8010. He is getting 5,340. Clear? Now you go back to your problem and see drawings are there. Please bring on debit side. Drawings of partner. Drawings of partner. What are the drawings? So 10,000. You have to go back to the problem and bring the drawings. Then go on the credit side of appropriation, interest on drawing. So how much? 1,000 and 750. So sometime what happens? Your debit may be more, your credit may be less. You get by balance carried down on the credit side of the partner. Sometimes credit may be more, debit may be less. You may get to balance carried down. Either of that will happen in your fixed method. Not sure. For fluctuation, something different. To balance carry down. So now here 10 and 11 is there. 11,000 is here. Here 4, 5, 8,000. Yes, more only. So how much you get? Yeah. So please total this. Yeah. Now 4,800. 4,800 plus 3,000 plus 8010. You're getting 15,810. Here 11,000 is there, minus 11,000. Your credit is more. 4,810 what you are getting. Total is 15,810. Now here 8,750. Here let's see 3,600 plus 5340. You get 8,970. Yeah, here only it is more. Again 8,940. So minus of 8,750. How much you get? 190 you are getting. So 190 plus 750 plus 8,000. You get 8,940. Is this clear? Fixed method is clear. Anytime partner's capital account, if they tell you in fixed, see that capital is intact. Brought down, carry down. Other things are all rooted in partner's current account or drawing account, whatever they tell you to prepare. Go to your appropriation account, bring all the debit, whatever you have debited in appropriation will be credited in your partner's capital account. Whatever you have credited in interest on drawing, along with the drawing which is given in the paragraph, in the problem will be debited and you get. Is it clear? So we'll go with last method of fluctuating. Now next method is fluctuating method. Partner's capital account. In fluctuating, what will happen? Now we bring the capital accounts. Along with that, whatever we have debited in appropriation will be, appropriation could have been there. So we will bring that appropriation, all those total. Please refer your partner's current account. I will make the partners. See, partners. Refer the problem which I have already done now. Partners capital account fluctuating fluctuating method. Okay. Yes. So now what happens in partners capital? Everything will be rooted here. Whatever beginning capital is there, that will not be intact. It will be fluctuated by addition of interest on capital, salary, commission and share of the profit less your drawing, interest on drawing. So particulars Sanjay and Gopi, particulars Sanjay and Gopi. Yes. Now go to the balance sheet and bring by balance. Brought down 80,000, 60,000. Clear? Go to the appropriation. You all go to the appropriation. So interest on capital, how much? 4,800 was there. 3,600 was there. So by interest on loan, only Sanjay had 3,000, correct? Dash. By sharing profits, that is profit and loss appropriation ka remaining. Yes, it was how much? 80105340, if I am right. Correct, 13,500 it was. Yes. All the items have come here. Two drawings. How much? 10,000 and 8,000. 10,000 and 8,000. Two interest on drawing. Interest on drawing. So you don't write short form, but in the exam you have to expand. Interest on drawing is how much? 1,000 and 750. 1,000 and 750. Correct? Two balance carry down. So let us write interest on drawing. Two interest on drawing. Yeah, interest on by interest on capital. By interest on capital on loan account, correct? Everything. everything is perfect. Now you total, always your credit is more. Here no chance of your debit more, huh? Always, because capital is there intact. So the capital amount only is heavy side. So 80,000 plus 4,800 plus 3,000 plus 8010, correct? 95,000, please over check. CBSE, please, manual calculation you are doing. So 80,000, 4,800, 3,000 plus 8010. So 95,810 minus of 11,000. You get 84,810. So total is 95,810. Now 60,000, then 3,600, 5,340. You get 68,940. If you minus 8,750, you get 60,190. Correct? To get the total 68,940. So 8010 plus 4340. Yes, correct. So I have done both the methods. Any one method may be asked. Sometimes they'll give you directly. They will not give you appropriation. They'll tell credit of current account, debit of current account, capital account debit, credit and all, and sharing ratio they'll give us and all. You are only going to prepare partner's capital account in fixed and fluctuating, whichever method they do. So now see, your capital you have introduced with 80 and 60, but now it has become more because of the addition and subtraction of debit and credit side. 84,810, 60,190, like that. So is this clear? The fundamental of partnership is, I have covered everything, where ICSE, CBSE, 10 plus 2 and state also can go through that. Only that pass adjustments are not there for any of the state boards, and changing ratio is not there. Rest, minimum and all that guarantee. Beside these two topics, everything is there for all the NCERT syllabus covered.